The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Monday the 9th, 30 to the close. What do you need to know out of Europe this hour? Commodities continuing to tumble. Gold to oil to crops. Prices are down as fears over the economic impact of the Delta variant surge across China and the United States get priced in. Dollars up as well. The EU said to be on the verge of reinstating restrictions on US visitors on the back of that Delta surge. We were expecting news, haven't got it yet. We'll get an update in just a moment. And a code red for humanity. As wildfires and flooding spreads, an unequivocal UN report ahead of October's COP26 climate conference in Glasgow points to the possibility that humans are creating irreversible change. Let's take a look at where we are with the markets. Equity markets fairly mixed. We've come out of the gate fairly slowly. This Monday, we're weighed down a little bit by what is happening with the commodity trade. As you can see, Brent crude down sharply, 3.4, but it's not just crude. We saw a big move in gold, Alex. We're also seeing the crops moving on what is happening here as well. Could affect demand there. There's an ethanol transfer story. But yeah, commodities front and center. That's your bag.
Yep, which the crop thing is interesting considering all the fires that are raging in California and Greece and Turkey, et cetera. All right, here in the U.S., a couple things going on. So first off, you had a really strong JOLTS number, and that actually jolted the market just a bit. So NASDAQ 100 now flat. Lori Calvasino of RBC upgrading large cap tech to that. You did have a little bit of modest outperformance as yields were lower. That reversed after that really solid JOLTS number. Now you have a flat NASDAQ 100. And yields now pushing higher, 131 on the 10-year. The result of higher yields, can you guess it? Stronger dollar, now up by 0.2% for the Bloomberg Dollar Index. So higher yields, stronger dollar. What does that mean? Much weaker commodities. So crude down now by about 3 to 4%. You also have J.P. Morgan and the likes of other big banks downgrading their 10-year, 30-year yield forecast. The idea, Guy, is that potentially you're not going to see as much of an overshoot of inflation from the Fed as you might think. That tolerance lower than the market thought. Yields will be higher, maybe 1.75, not 2%. That's a re-rating for the whole market as well.
We're actually getting some quite interesting some moves in the Treasury market. 132 now on a US 10-year through the 200-day moving average. So, as you say, we are seeing a reaction to the data. We've got CPI still coming up. This is all showing up, of course, as you say, Alex, in what is happening in the commodity space. Oil at an 11-week low. Like, some of this is COVID concern. Some of this is what is happening with the data and the dollar. Gold recouping most of its early losses. We had a sharp plunge overnight, Asian trading. A lot of Asia's out, very thin volume. And maybe that is a factor in what we've seen. But nevertheless, it is interesting. It's a really interesting setup. Joining us now with more, Bloomberg Precious Metals and Commodities reporter Eddie van der Volts, joining us to give us his take on what we're seeing. The move in gold, I think, is curious, but it's wider than that. It's Brent. It's what's happening in the mining space. The basic resources sort of really on the move today on the back of what's happening in China. Eddie, bring it all together here. What are we seeing, and is it going to continue? Because it happened last week, and now it's bleeding into Monday morning.
Yeah, absolutely. I think, Alex had a really good explanation for us there on why exactly it is that we see commodities, that are so different to one another, gold and copper and oil moving in the same direction on the back of this. And I think some of that is true. But I also think there's two dynamics that are playing out at the same time. On the one hand, we are seeing weakness in China as a result of the Delta variant, because, China is really saying they are going to clamp down on this. On the other hand, gold really worried about, that tick up in inflation, that tick up in jobs numbers, which says that the Fed can act sooner. And I think that is what's really pushing down the gold price. And the gold price, it's just like a little bit of a canary in the coal mine with regards to the tapering, potential tapering tantrum that we see. Well,
oh, nice.
Sorry about that.
Almost. No, we love that kind of stuff on this show. All right, Eddie, thanks a lot.
In the gold mine.
It's
Definitely
true. Eddie van der Volts of Bloomberg, thank you very much. All right, let's get to the code red for humanity. As Guy was talking about, a landmark report by climate change scientists was out today. It's going to ratchet up pressure on the world leaders to rapidly end the use of fossil fuels. Here to take us through the biggest takeaways of the nearly 4,000-page UN study is Akshat Rathi of Bloomberg News. Akshat, tell us more about what we learned and the significance.
So 3 things to take away: certainty, agency, and urgency. Scientists tell us now 100% unequivocally that humans are the reason for causing climate change. But they give us agency in that the worst impacts are very much still in humanity's control in what we do with emissions over the next decade, especially, but decades to come. And urgency, because the sooner we start to cut emissions, the lower the cost of cutting those emissions and the lower the impact that climate is going to bring to us. We should remember, however, that some climate impacts are already being baked in. So sea level rises, for example, will continue to happen even if we stop emitting emissions for hundreds to thousands of years.
Akshat, it's an incredible setup as we approach the Glasgow meeting and huge amount of politics around that as well. But a fascinating report, really quite a concerning report, as you say. Akshat Rathi joining us on the latest. How much of this is reversible? How much of this is manageable? Let's talk about what is happening with the travel story. The European Union likely to discuss reintroducing travel restrictions on arrivals from the United States. We had the potential for this news to come out today. We haven't had it thus far. When do we think we're going to get it? What form is it going to take? Bloomberg's EMEA reporter Maria Tadeo, I'll get that right, joining us in Berlin. Maria.
No worries, Guy. It's okay. Well, look, this is a meeting that is still happening. It's ongoing. These are deliberations as to whether or not passengers from the United States entering Europe are now allowed to do so or would be allowed to do so on a non-essential basis, so essentially whether or not they could come here on a holiday. Now, the Europeans had been arguing, and this meeting, as I said, is still ongoing, that the number of cases had rocketed and therefore that should be tamed, that more restrictions would be needed. Now, we understand, and again, this is a discussion that is still taking place, so it hasn't gone either way yet, but now the Europeans are considering taking a step back on the decision for the time being. Remember, they said this was always based on science, but if you look at the numbers, that threshold has already been surpassed by the United States. The number of cases really jumping means that, in theory, the European Union should introduce restrictions.
All right, Maria, thanks very much. Really appreciate Bloomberg's and Maria today. I'll go back and forth between Guy and myself, like who's going to have the least amount of possibility going to which nation first. All right, coming up, ECB Governing Council member Jens Weidmann warning that inflation in the euro area could actually pick up faster than expected. We'll get more on that next. This is Bloomberg.
Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. Senate Democrats have released their budget resolution that sets up President Biden's $3.5 trillion economic agenda. They also left out any language on raising the debt ceiling. That means there could be a showdown with Republicans over that next month. The budget blueprint is expected to be voted on this week after final passage of the bipartisan $550 billion infrastructure bill. It's a victory for Norwegian Cruise Line and its vaccine requirement. A preliminary court injunction will allow Norwegian to require proof of coronavirus vaccination as a condition of boarding its ships in Florida. A recent state law in Florida bans vaccine requirements. That law has been put on hold for now. A wildfire in Northern California is now the second largest in the state's history. The Dixie Fire has blackened nearly 500,000 acres. It's prompted mass evacuations and is just 21% contained. The fire started July the 13th and is one of more than a dozen major fires in California. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. So ECB Governing Council member Jens Weidmann warning that inflation in the euro area could pick up faster than expected. He urged not to drag out the institution's pandemic bond buying program. Let's talk about this and how it fits into the wider narrative with the Fed. Joining us, Kit Jukes, SocGen's chief FX strategist. Kit, I want to come at this first of all from a US point of view, then we'll come across it from a sort of Eurozone angle. The data out of the US is getting stronger and stronger. The payroll number Friday, super strong. We've just had a super strong JOLTS number as well. We've got CPI coming up this week. If CPI comes out strong later this week, how quickly do you think the euro tracks towards 116 against the dollar?
Quite quickly in the current environment. I mean, markets are thin. You can see that in the way that things are behaving at the moment. It's still very summary in markets anyway. And having broken through some kind of key levels and having been really glued into such a narrow range for the last couple of weeks, I think if we break lower, we get to 116 quite quickly. Although I think in my mind at the moment, I think 115 might be a sort of a hard line that we don't get through. But the next 1% we could do quite fast.
I mean, we've re-rated on the 10-year fairly quickly in the last 2 trading sessions. And that's really brought the dollar higher as well. And I'm wondering, on the U.S. side, how much more juice do you think there is in there from that strong labor number, from re-rating anything from the Fed, and then also from the JOLTS data from today? Into the CPI, quite frankly.
Yeah, there's only so much juice. But if you said that that we were all talking about yields going through 2%, well, market consensus was probably for a move through 2%. Not so many weeks ago was all that, in the second quarter. And then amazed that we're down on 120. If I woke up tomorrow and found we'd spiked overnight to 135, I wouldn't have anything clever to say about that. I think it's a feature of where we are that, we're talking about when the Fed announces or pre-announces the start of tapering, which probably happens nearly a year before the first rate hike can happen. So that's what we're moving with. And then the market is trying to make guesses in its mind about when or if we ever get back to neutral Fed policy before this cycle ends. That's a really long piece of elastic to be moving around. So you move the front end expectation a little bit, and we can overreact on where we send a 10-year note yield. So and then put that into thin markets. And I wouldn't be surprised if we get everybody on the bearish side of the camp, everybody within the next week. And then if a piece of news comes back that sends us all back the other way, don't be too surprised by that either. It's that kind of market right now. But how high could a 10-year note be to be consistent with the idea that we get rate liftoff in a little over 12 months' time from now? 2% is possible on that kind of mindset. It's possible. I don't think it's likely, but it gives me room for the market to stretch this further after a series of good numbers.
Kit, Jens Weidmann heads the Bundesbank. It's his job to be worried about inflation. How out on a limb do you think he is, though, versus everybody else at the ECB? And how wide do you think the spread could be in terms of policy between what happens at the Fed and what happens at the ECB?
I think the gap could be still enormous. I mean, he is playing his role, and Christine Lagarde is playing her role in more or less saying, we're doing nothing with rates. What we need before we even thinking about doing anything, even with asset purchases, is for some fiscal authorities around Europe to step up the plate. The European economy needs more help. So, if you could end up in a place where the ECB is doing less of the heavy lifting to help the European economy and governments are doing more fiscal lifting, that would be a wonderful thing. I suspect that for a certain amount of time, Jens plays his part, Christine Lagarde plays her part, and we don't get very much of anything, and that the focus remains on what the Fed's doing. But clearly, in terms of surprises, anything that can move a bund yield higher significantly, keeping up with a 10-year note yield, I think is supportive for the euro. So you probably get more correlation between euro-dollar and what the bund does than with the treasury or the spread, if that makes sense.
Yeah, it does. And what doesn't make sense to me, though, is why Weidmann would be talking about that when the inflation overshoot is 1.9%. They haven't even overshot the target. I understand the UK, I understand the US, if you're looking at 4% inflation, but 1.9% isn't even 2%. So I understand that he might be a minority, and in some ways to say that Weidmann is worried about inflation is, kind of a no-brainer. But nonetheless, which central bank is headed for the biggest policy mistake?
Look, I don't think the Fed is headed for a significant policy mistake. So the ECB could be, but they're not going to. It's a Punch and Judy show has a punch and a Judy, and punch does what punch does, and that's where we are at the ECB. And it doesn't mean that translates into actual genuine action in the real world. That they're not going to tighten aggressively. They have got at some point to nominally taper asset purchase, but remember that they're already in various forms buying just about as much as they're legally allowed to buy of everything, as far as I can see. So that's not such a big deal. I mean, I would almost step away in that sense from the asset purchase debate and say, what's going to happen with interest rates? We're over a year away from the first Fed rate hike, and we're much further away than that from the first ECB hike. Indeed, the debate in Europe is, will we ever get away from negative interest rates? You know, in my lifetime, let's start with something manageable. You know, it's really, because the big difference is there's a shot that the Fed can get away from the zero bound in this economic cycle. Don't know how far away, but they can get up above zero. I cannot see how the ECB manages that in this cycle.
What about the Bank of England? I spoke to the governor last week. I was a little surprised at how hawkish he was, laying out very clearly the fact that the Bank of England now has an eye on the tapering process. Crispin O'Day thinks it's never going to happen. He thinks, well, maybe the taper happens, but he thinks rate hikes never happen either. Would you agree with that?
He's quite interesting on the kind of sequencing, because everybody else is pretty clear that, you know, you stop buying bonds and then you start raising rates, and the Bank of England's in a different spot from them. I have some sympathy with the fact they're laying it out like that, and I'm going to watch as an experiment. I do think that the UK is going to be able to get away with higher rates sooner. I think most of the really housing-sensitive economies have got rates at levels that are causing a fair amount of damage, and that there's some sense in normalizing the interest rate level when you can. And so far, the UK economy is you know, beginning to pull ahead quite nicely. So again, I don't think that we're going to get anything in the UK this year or in the first half of next year on the rate side. But I'm certainly comfortable with the idea that we'll get a rate hike in the UK before we get one from the ECB, and that euro sterling is more likely to go down a bit than up a bit. Let's put it that way.
That's a fair point. All right, Kit, it's really good to see you. Thank you very much, Kit Duke, Associate General, Chief FX Strategist, joining us there. All right, coming up, to infinity and BIONTECH, the company climbing after raising its full-year vaccine sales. More on that next. This is Bloomberg. Live from New York, I'm Alex Steele with Guy Johnson over in London. This is the European close on Bloomberg Markets. So shares of BIONTECH have more than quadrupled this year. The company also raising its forecast for this year's COVID vaccine sales to $18.7 billion. Joining us now with more, Naomi Kresge, Bloomberg healthcare and pharma reporter. Naomi, on the call, did they say anything about boosters, et cetera, in light of the Delta variant?
You know, boosters were a big topic on the call today. A lot of people asking about boosters, and BIONTECH repeatedly said that right now they think the best approach is going to be to continue with a booster dose of the existing vaccine. So looking at a third dose with the existing vaccine, that would probably be enough to deal with the Delta variant. Now, they're not ruling out a booster with a different sort of a vaccine in the future, but right now they're saying that they will stick with that existing vaccine.
Naomi, this is a company that's come really far, really fast, and that is reflected in its share price. However, in some ways, they are still a one-trick pony. This is their only product that they have on the market. What do we know about what comes next? I know they're looking at malaria. They're obviously looking at oncology as well. How far along are they? And is the success with the COVID vaccine kind of accelerating everything else that they're doing?
It certainly is. I mean, this COVID vaccine revenue is really being plowed into the rest of their pipeline. In addition to malaria, they'll, with Pfizer, be starting human trials of a flu vaccine this year. And then, of course, you mentioned oncology, and that's really the big piece that could be significant, but is also, more uncertain in the pipeline. They have, I think, 15 clinical trials going on, or 18 trials with 15 products in oncology. They've started 6 new trials this year. They're really pushing forward with that.
And before we let you go, Naomi, just in terms of the short term for vaccine contracts as well as production capacity for BioNTech, did we learn anything about that for the next, say, 6 months?
So they said today that production capacity for next year would be 4 billion doses. They already have for 2022 and beyond contracts for more than 1 billion doses. The vast majority of that is an EU contract for 900 million doses for 2022 and beyond. So we are starting to see the order book shape up a bit for next year.
Naomi, thank you very much indeed. Appreciate the updates. Stunning share price performance over the last year. Naomi Kresge joining us on what is going on at BioNTech and the update that we've had today. Alex, it is increasingly looking like the boosters are going to be required. But on the other hand, in the United States, we still need to vaccinate a lot of people. One of the themes that I'm going to take away from this program is the US feels like it's falling further and further behind. You talk to the CEOs, that is where their concern is.
It is becoming so politicized now, too, that it feels like bridging that gap is going to be quite tricky. Those that need just more information or help getting there or help understanding things is different. But when you come to the politicization, it's something very different indeed. We talked to Mark Bristow, who has mines kind of all over the world of Barrick Gold, and he said that in Nevada, of all places, is the least amount of vaccinated workers versus Chile, which is 100%. That surprised both of us.
Yeah, that was a stunning revelation, I thought, in terms of what is happening here. He's obviously managing his people in quite close proximity. These are difficult operating environments, but they've managed to do it elsewhere, and they can't do it in the United States. Israel today talking about 40 and 50-year-olds getting booster shots. So feels increasingly like this is going to be an ongoing process as well. Europe's still some way when it comes to vaccinating teens as well. We're certainly not done with this process by any stretch of the imagination. That is all showing up in terms of the data we're seeing in the markets as well. We've seen the volatility. Alex and I have been talking about it throughout this program that we're getting in the commodity space right now. That's showing up in equity markets as well. Certainly the energy stocks very much under pressure today here in Europe. We're 4 minutes away from the close. Energy under pressure. The DAX is underperforming a little bit as well. But after we've dealt with the close, we're going to get a bigger take on what is happening with energy. Amrita Sen of Energy Aspects is going to be joining us to give us her take on what we're seeing in the price action. Massive down move last week, and it's continuing this Monday. This is Bloomberg. So we're wrapping up a grey day here in Europe. I'm not talking about the weather, I'm talking about the markets going nowhere in a hurry. You can see that on the map. The IBEX, the CAC, the DAX, absolutely no movement at all. We're flatlining here in Europe, basically digesting the data from Friday out of the United States, maybe looking forward a bit to what is happening later with the CPI data. Not a lot of catalysts coming in terms of the corporate news either. We do have, obviously, the commodity story that we need to talk about. Little bit of extra movement out of London, the Italian market a little bit, but basically the major continental markets going nowhere in a hurry today. But remember, I may say that, we are at near or at sort of record highs here in Europe. So that's what you've got to bear in mind as well. Let's show you the numbers because this kind of encapsulates that very neatly. If you go to the stock 600, there you go, 470. We've been kind of in and around this area for the last few days. We broke out of the previous range for 460. Nice little quick climb up towards the 470s. But now we're kind of holding in there as well. In some ways, a similar story over in the United States. The catalyst, the earnings season provided maybe beginning to sort of fade a little bit into the rearview mirror. Kind of what comes next? What kind of fear are we going to get in the markets about these levels? But in terms of what's the positive upside catalyst as well to drive stocks higher? Those are the questions I think markets are trying to figure out right now in relatively light volume. In terms of the individual markets, as I say, you're not seeing kind of that much movement, but Brent, gold, the euro, all key movement outside of equities. Brent down by 2.7%, gold, flash crash overnight in light volume over in Asia. And then we've got a 117 handle. Kit Duke's talking about potentially a 116 handle in fairly quick order if we get a big print on the CPI number out of the States. FTSE DAX CAC, I've already kind of given you the idea of what is happening here. Not much movement, certainly at a headline level. FTSE's up by 0.2%, DAX absolutely flat. CAC aren't going nowhere in a hurry. So let's break it down from a sector point of view and show you what is happening there. The GRR Energy, obviously a factor into the mix here. That big move down in Brent, globally energy prices under pressure, is showing up. But energy's here, down by 0.3%. The biggest losses, the car sector, the real estate sector, the industrial sector. That's where the big losses have been. The market looking for safety. Healthcare is trading higher. The utilities are trading higher. The insurance sector is trading higher. So the defensives catching a little bit of a bid. We are still in earnings season. There is still something to talk about. So let's talk about some individual names. Hargreaves Lansdown, one of the big platform for share trading here in the UK. A little bit of a trading slump causing the market to mark down the stock fairly aggressively, as you can see, down by 11%. Deliveroo, let's talk about this. Delivery Hero, its rival, taking a 5% stake in this stock. Roo is its name. You obviously got to think about Tigger, but Deliveroo up by 4.5%. The travel sector is under a bit of pressure. We have seen the simplification of the rules, but nevertheless, there is a concern about what's happening in furlough, what's happening with Delta. The sector, the stocks remain under pressure. EasyJet down by 2.7%, Alex.
I really would have thought you were more of a Tigger person, but Roo is my favorite.
No, I'm definitely more of a Tigger person.
Okay,
but if you're going to talk about Roo, you've got to talk about Tigger.
The cutest. Okay, let's get back to the oil market. That has been extending some losses here over the last 7 days. We're looking at oil down by about 10-11%. That would definitely be in a correction now. Amrita Sen, Energy Aspects Head of Research, joins us now. Amrita, you noticed the sentiment kind of turning a few weeks ago, that the narrative that we were looking a lot more in surplus in 2022 than maybe some would have thought. Do you buy this narrative that we're seeing?
No, I don't actually. I don't think 22 is going to be a surplus. And I think there's a huge amount of misconception around the 2022 balances. Part of that is because this year we are obviously drawing down inventories, huge amounts, right? Like we are pretty much back at the 5-year average globally. And in the OECD, we're back below the 5-year average, even the 2015 to 2019 average. Obviously, 2020 is inflated, so you take that out. And next year, balances are showing very small draws, maybe even flat. And I think that's what's giving people concern, oh, next year's balances are weak. But you can't draw inventories when there's nothing to draw. You can't have every year of stock draws because we are going to be entering next year at very tight inventory levels, and we will have very low OPEC plus spare capacity because they will be increasing production. So I think it's what's causing the confusion, that the number isn't showing a big draw. But I think people forgetting the fact that we have already drawn down the overhang from last year, and we continue to tighten the market.
Amrita, do you think the market's overreacting to what is happening with the Delta variant, particularly in China, but to a certain extent in the United States as well?
I think that's a valid question. I mean, is it overreacting given what happened last year? I can see why there are fears. We've had lockdowns like this before, even when things were looking good, and then you get flare-ups. So I understand the concern. But for now, all the numbers that we are seeing, at least on the oil demand side, and talking to contacts within China as well, very clearly that, look, yes, there are localized lockdowns. Only 15 areas or provinces have been hard hit, and where lockdowns are really, or restrictions rather, are very severe. We're not looking at nationwide lockdowns. Vaccination programs are very high. And in places that are very high, you're not seeing the impact on hospitals, right? So this is different. Yes, I understand why the market is concerned, but we are very confident that, like what happened in Jan-Feb this year, this is not going to last for more than a couple of weeks, and the government in China will be able to get this under control, and we're going to get oil demand back up again.
So, Amrita, and by the way, I'm going to say the word backwardation, but it's not my fault because Guy was the one who set up this segment, okay? So I'm going to say it. It's not my fault. If you look at backwardation, we've lost a lot of steam here. Backwardation in theory means that prices are higher right now than they are in the future, which indicates a tighter market. Obviously, that's been drained as we highlight these fundamental factors. What's the trade? How do you play your thesis with a narrowing backwardation?
I think right now, given how sentiment is, I mean, you don't catch a falling knife. So I would not get in the way of this sell-off. we probably still have a little bit to go, because this isn't just about oil. And the note we've published today, we do kind of talk about the fact this is not just oil market fundamentals, this is wider issues, particularly US Treasury yields. A lot of people expected a steepening of the US Treasury yield and positioned for that. And as a hedge, they also had bought oil. That entire trade is unraveling, right? So not get in the way of that. Once the positioning is even cleaner, it's already, most long positions are already out, but once that's been cleaned up, then I think you start to position for the upside for later on this year. So a deck 21 or even a deck 22 would be those kind of, whether it's the backwardation there, so you'd play the 21-22 spread, or just the flat price as well, because again, the sell-off here after this rout is over is going to make the market look very attractive, longer dated futures in particular.
Just again for context, it is Alex's favorite word. She used it 3 times in one question for you there, Amrita.
For you, Guy. Just for you.
Let's talk about the dollar. I was talking to Kit Jukes from SocGen a little bit earlier on. We were talking to him. He says you could get euro dollar 116, you could get down to 115. The dollar's on the front foot right now, given the data and the spread difference we're going to see across the Atlantic. Again, how is that going to change pricing dynamics?
Well, that's, again, partly playing out via the treasuries, right? Like, effectively, we've seen the move in the treasuries, and therefore we've seen the move in the dollar. And, look, a strengthening dollar is headwinds for the market. It's not the main driver, for sure, but it doesn't help, particularly at times like this, when everything is selling off anyways, right? So I mean, I'm with Alex, by the way. I love backwardation too, but I do think where the dollar kind of comes in is much more on the flat price side, right? And the pressure you've seen, that is much more a dollar kind of dollar play as well. I don't think the spreads are being affected by this, but yes, there will be a lot of pressure on the market, particularly on flat price, more so than spreads, given what's going on in the broader macro backdrop and particularly the US dollar.
See, all the cool kids like backwardation. So Amrita, when you're taking a look at data points, what's it going to be? Is it going to be imports, or is it going to be stock draws? And in which region? Like, what's the most important number of those two that you're looking at going forward?
The tricky bit right now is that the stock draws that we're seeing are all in China, right? And the data isn't very opaque there, and that's the problem. Whereas what we need to see to get the market back in confidence possibly is more OECD draws, but then again, the US is drawing. And we haven't talked about refining margins, the other the factor that cool kids love to talk about. Margins are actually starting to look a lot better right now after probably 2 years. So that is a sign that demand actually is picking up. So there are those kind of green shoots. And I think once the market focuses on that, I think that's when, so I would say refining margins and stock draws would be the 2 key ones which we'd be highlighting.
One of the cool kids. Amrita Sen, thank you very much indeed. Greatly appreciated. Amrita Sen of Energy Aspects. She's the head of research there. As ever, thank you very much indeed. We don't want to go too far down this rabbit hole.
You do, you so do, but you're not gonna.
European stocks finishing the day. Actually, the auction did see a little bit of a tick lower, to be honest. The FTSE only finishing up by 0.1%. The DAX down by 0.1%. The CAC 40, let's call it down by 0.1%. To be honest, we've gone sideways today, looking for a catalyst. Big one, obviously, on Friday. I think we may be marking a little bit of time. We don't have the earnings season as a catalyst. I think we're waiting for that CPI number, Alex.
All right, well, let's continue the conversation with commodities, because it's been a brutal day across the board. Also, iron ore getting hit, copper, gold, etc. And all of that kind of relating to China, what they're buying. Also, higher producer prices that we saw over the weekend means that they need to kind of tampen down those commodity prices. We're going to get some insight with George Magnus of Oxford University China Center. He'll be joining us next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Rich Gupta, and you're looking at a live shot of the principal room. Coming up, Jan Swartz, Princess Cruises president. That's at 1:30 p.m. in New York, 6:30 p.m. in London. This is Bloomberg. Let's check in on the Bloomberg First One News. I'm Ritika Gupta. New figures out today highlight the struggles American employers are having to hire enough workers. Job openings in the U.S. rose in June by more than forecast to a record high. The number of available positions, 10.1 million. The labor supply is expected to increase in the coming months as supplemental federal jobless benefits expire. Wildfires are raging out of control on Greece's second largest island. Scores of homes and businesses have been destroyed. Thousands of residents and tourists have fled. The fire is the worst of the dozens that broke out in Greece's longest heat wave in 3 decades. Temperatures have soared to 113 degrees. And in China, the microchip industry is feeling the heat from Beijing's regulators. On Friday, there was a warning in state-run media that the government will show no tolerance in cracking down on speculators in the chip market. That sent semiconductor-related stocks lower today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So let's kind of pair the stories of what's happening in China with what's happening in the commodity market. So this chart is the relationship between Chinese producer price index versus iron ore prices. And it's over 10 years, because I think you can see the relationship quite cleanly. They tend to wind up tracking each other, at least they have in the last few years. The idea is if iron ore prices, the orange line, go higher, producer prices will move higher as well, surging about 9% just this July. Now, you've had the government trying to tamp down the rise that they've seen in commodity prices. To some extent, it's working. They don't want steel prices to go higher. The steel mills stop working. Therefore, you wind up having less demand for iron ore. You are seeing that trickle into the market. But this problem does create an issue for the PBOC. Just how much more monetary stimulus can they pump into the economy when this is what they wind up worried about? Joining us now for more, George Magnus, Oxford University China Center Research Associate. George, it's great to see you. How do you see the dilemma the PBOC has now when they're trying to tampen down those commodity prices? They can't do it fast enough. That trickles through to the PPI, that trickles down to their effectiveness, basically.
Yeah, I mean, there's a bit of a dilemma for the monetary authorities in China, and actually for the government as well, because actually most of, coming into 2021, they were kind of keen, given that they were kind of first out of the blocks in terms of recovery from the pandemic, to want to try to kind of step a little bit on the kind of policy brake, right? They wanted to kind of pull back some of the fiscal and monetary stimulus which they kind of injected into the economy in 2020, and I think that's still the agenda. Actually, I mean, I feel that they are trying to kind of balance here between wanting the economy just to continue to grow, although they know it's kind of moderating a little bit, but they don't want it to moderate too much. And of course, the PPI, the producer price numbers which they're getting, are not all, as they have on occasions in the past, not all down to China's own policies, let's say in housing, which in the past, was kind of on a tear. And now they're trying to kind of moderate it with restrictions on mortgages and second mortgages, and the developers are having problems. So some of what's going on in the world economy actually is pushing up producer prices, which is affecting China. So yeah, it's a difficult balance for them to strike between keeping the economy, growing at a satisfactory rate, but allowing it to kind of decelerate a little bit whilst they impart mild restraint.
George, who's in control of the Chinese economy right now? The authorities or the virus? They're in a situation where they have a resurgent virus. They're dealing with Delta. The vaccines there may be a little less effective. How big a problem is this going to be?
Yeah, well, I think at the moment you'd have to say obviously the authorities are still in control. I mean, they have this kind of zero tolerance policy towards coronavirus. If that's not kind of a contradiction in terms. I mean, the outbreak of cases in a kind of a rising number of urban venues or cities now, I mean, is something of concern. But they're still, relatively minor as far as we know, as far as we can believe the statistics. And of course, this is something which is going to become increasingly troublesome for them if it continues. A, because the background about the Chinese virus, the vaccines, of course, which are believed to be not as effective, and of course with the Winter Olympics coming up next February.
So talk about the data for a second and talk about if we can believe it. So there was a lot of hay being made in the overnight session about how Goldman Sachs, JP Morgan all lowered their growth forecast, Nomura as well for the third quarter, but also for this year. For this year, they're still looking for an 8 handle for GDP. What is good growth anymore for China? Like, what's good, what's bad?
Yeah, I'd be surprised myself if it was up in the 8 area, actually. I think it's going to be a little bit less than that. And I think we'll see, we have to kind of filter through the noise from last year's, base effects, and we'll see. We already saw a big drop in the year-on-year numbers in this quarter, and that's going to continue through year end. So what's satisfactory? I mean, there isn't really, for the first time ever, well, not ever, but for the first time that anybody is aware of, there's no average growth rate for the current 5-year plan period, which is 2021 to 2025. Although Premier Li Keqiang has actually said in his work report earlier this year that there would be annual adjustments to, growth expectations. So we don't think that, or I don't think that growth targeting has gone out the window altogether, but it's clear they don't need 8% growth now. What they need really is jobs growth. That's the really big issue, I think, for the Chinese leadership.
George, to get that, can they do that on their own? There seems, you talked about the zero tolerance to COVID a little bit earlier on. China needs to learn how to live with the virus if it's not going to end up being isolated. But in some ways, that may be the objective here. It seems to be isolating itself, not only when it comes to COVID, but also when it comes to foreign capital as well. Are the kind of objectives for the economy possible with less foreign interference in terms of, I say interference, but less foreign involvement in the process?
Yeah, I think this is one of the big issues that the Chinese leadership has to face itself over this decade. And which most of us will be spending a lot of time thinking about, because this is the harshest environment, external environment, that China has faced, and it's partly of its own volition, and partly because of the reaction of foreign states to what they regard as a much more kind of truculent, feisty China in the 2020s. But I think this is the harshest environment they will have faced really since the Mao era. And they're still critically dependent on semiconductors, integrated circuits, a lot of foreign technology, including a lot of it that's either resides in or based in the United States or United States companies. They want the know-how and the US dollars that Wall Street and other foreign financial firms will bring to the Chinese economy and Chinese financial markets. But they don't really like this kind of market opening consequences, which we've seen through the crackdown on technology, data, and financial tech platforms. So it's a very, very, I find it a very interesting period to watch China. I mean, more interesting than at any time that I can remember. But it's also rather worrisome because I think it's we don't really know, obviously, which way an increasingly nationalistic government is going to turn, faced with a lot of external threats.
George, it's always a pleasure to catch up. Thank you very much indeed for your time today. George Magnus, Oxford University China Center Research Associate. Thank you. This is Bloomberg.
There's still a lot happening, Guy, in the next 24 hours. So at noon, the U.S. Senate session will open and will resume debate on the infrastructure bill. And just recently, you had Republican Senator Pat Toomey saying there is a deal among lawmakers on a cryptocurrency tax amendment to the infrastructure bill. This was a big problem in the debate in moving this bill forward. It looks like they may have then reached a compromise. It was how you'd wind up effectively monitoring crypto exchanges and the tax that you'd put on them. So maybe there's a deal coming.
And then we get on to the next round, part 2, which is going to be fascinating. So fascinating to watch. What do we got tomorrow? SoftBank out with numbers. IHG Intercontinental out with numbers as well. Be really interesting to see what's happening in terms of the wage story. Coinbase earnings also to watch out for. We're coming to the tail end of the reporting season, Alex. But nevertheless, some heavy lifting still to be done. And interesting what's happening with the Delta variant in all of these businesses.
Yep, I should point out also in the infrastructure bill, Democratic Senators Ron Wyden and Republican Cynthia Loomis have also said that there is a pact on the crypto amendment. So definitely some positive momentum coming into the Senate opening at noon. All right, that wraps up for me and Guy. Balance of Power up next. Guy and I are headed to cable on DAB Digital Radio. This is Bloomberg.